Okay, welcome to the weekly meeting, March 1st. Here we go.
Higher lows. Now, that's pretty much the heartbeat of the market, right? The price runs up, it impulses up, it pulls back, it corrects back, whatever terminology you like to use, right? It impulses up, it corrects back, it runs up, it runs back, it runs up. That is the heartbeat of the market. Now, collectively, all of those runs, as you can see, that makes up what we call a trend, right? Pretty basic stuff. Multiple runs, that collectively makes up a trend. So, are you ready for what is the secret sauce to really nailing and kind of mastering market structure? You are fantastic. Well, the secret sauce is a run on a higher time frame is a trend on a lower time frame. Okay, a run on a higher time frame is a trend on a lower time frame. Pretty basic, but again, you'd be surprised at how many people don't truly grasp this, or at least know how to kind of put it together in a really systematic and mechanical process for you to map out your market structure, for you to then set up the charts every single time, know exactly what you're looking for, know exactly what direction you want to trade in, and just really know and have a good idea of what the market is doing to then allow you to trade with confidence, to really know how far you can push trades, when you should be trading pullbacks, etc., etc. So a run on a higher time frame is a trend on a lower time frame. Okay, cool. What does that really mean? Well, let's hop on the charts and take a look. So here we have a little diagram I put together on TradingView just because it's a little bit easier to annotate. So quick recap of kind of what we're looking at in part one, right? Basic sort of market structure is price makes a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. At some point, that bullish expectation of higher low will fail, and price will break that higher low to form a lower low. We are now in a confirmed bearish market. Price will then pull back to form a lower high. But because this high here took out a strong low, this now becomes a strong high, right? In theory, it should be protected because it took a hell of a lot of money to form that lower low, right? To cause that trend change. So when price is pulling back up, we run with the expectation that that high will not be breached, right? We're playing within this range. Price can pull all the way back up. As long as it doesn't take out that strong high, right? We expect a lower high to form, and then we can look to trade and target this low being a weak low, right? To then form that lower low. And so on and so forth. We repeat the process. We're playing within this bearish swing range. We expect this to be a strong high. We expect this to be a weak low. So when price pulls back, we can look to try and trade short the lower high and target that weak low. Okay, so that's pretty much a very quick recap of basic market structure using the concept of weak and strong highs and lows. Now, going back to kind of that secret sauce phrase I was saying, a run on a higher time frame is a trend on a lower time frame. So how can we use that to our advantage? What am I going on about? Well, that trend I just spoke about on the higher time frame, right, is made up of a series of what? Those runs. So that's a run up, that pro trend move. Then we have a run back, the correction, the pullback, whatever you want to call it. So that's a run, that's a run, that's a run, that's a run, so on and so forth. Now, each of those runs on a lower time frame will be a full blown trend. So, for instance, on the higher time frames, right, the white line, price breaks that high, right? We get that break of structure to form a higher high. Now, what do we expect after a break of structure? We expect a pullback on that time frame. Now, purely just talking about market structure, no supply and demand, no liquidity, none of that fun jazz, right? Purely just market structure. How can we anticipate when that pullback is likely to be starting? Well, on the lower time frames, that's when they come to our advantage because we can look for that shift in order flow, that shift in market structure, where the lower time frames will switch bearish in order to facilitate the higher time frame pullback. Okay, so what do I mean by that? Well, we have that pro trend run, right? That one sweeping movement to the upside on the higher time frames, and within that bullish run, the lower time frame will have a full-on bullish trend. So the lower time frame will be forming higher highs, higher lows, higher highs, higher lows, higher highs, and at some point, that lower time frame bullish trend will then switch bearish because price will break structure to the downside on that lower time frame. So it will take out that higher low to then form a lower low right there. Now, when that happens, that then gives us that extra confirmation that, okay, our higher time frame, that white line is now pulling back because the lower time frames have switched bearish, right? The structure has switched bearish on the lower time frames. Now we have a confirmed pullback on the higher time frame. Okay, so now we're trading that counter trend pullback with a bearish lower time frame trend. Now, how do we know when that higher time frame is going to form that higher low. Because remember, this whole time, price is playing within this swing range, okay? So this is our higher time frame higher low. This is our higher high up here. So yes, the lower time frames are now bearish. The higher time frame is pulling back, so we can look for shorts. But we have to be aware the whole time in the back of our minds that the higher time frames are bullish. The higher time frames are more powerful. Remember, time is power. At some point, that bullish higher time frame is going to take over. It's going to look to form that higher low, and it's going to look to try and make that next pro trend swing run and target this weak high at a minimum. Okay, because we expect this strong high low to be protected. So this whole time we're pulling back, and the lower time frames are bearish. At any point, that higher time frame is going to take over. It's going to want to form that high low, and it's going to want to continue the trend and take out that weak high. So how do we use the lower time frames to tell us when that higher low may be forming so that we can get long, we can catch this higher low, and we can target that weak high? Well, as you probably guessed, we wait for the lower time frames to switch bullish. So obviously it's making that lower low, lower high, lower low. And then when we see it break structure, we see the lower time frame break structure to the upside to give us that lower time frame higher high. That then gives us that confirmation, not a guarantee, but a good signal that that higher low may now be in place. And now we can look to basically get long to now target that weak higher time frame high, right? Because we think that the higher low is now in place. And so on and so forth, right? So then we have that lower time frame bullish trend for that next pro trend run. Now, there will be some cases where the higher time frame pulls back, like it pulls back here, and where the lower time frame may not actually switch bearish as well. So imagine if you have two time frames that are quite close together. So let's say the higher time frame, the white line, is the 4 hour chart, and let's say the lower time frame, the orange line, is the M15, the 15-minute. They're reasonably close together, and sometimes what you'll see is the M15 will have a big swing move up like that. The 4 hour will pull back, but actually it never takes out because that is the most recent M15 swing low. And it has just an internal structure pullback, right? That substructure break. I don't want to get too caught up in substructure and minor structure and all that stuff. But essentially, if I can simplify it, the 4 hour pulls back, but the most recent M15 swing low, the lower time frame swing low, is here. So although we pull back, the M15 actually never switches bearish. Okay, so it doesn't have to switch bearish for the 4 hour to pull back. There are some circumstances when that happens. Then we see that substructure breaks the upside, but the internal structure switches bullish again. We pull back in, and then we can target that weak high, so on and so forth. M15 switches bearish again, then the 4 hour pulls back, and then we get that full on trend reversal. Okay, so a run on a higher time frame is a trend on a lower time frame. We're essentially using the lower time frames, looking at the trend on those lower time frames to give us an indication when is the pullback ending and when is the pullback starting on a higher time frame. Okay. Yeah, hopefully that makes sense. Let's kind of go on to a bit more of an example you should be familiar with to kind of see how we can kind of use this sort of process. So this is what we're looking at in depth in the last video, right? Where essentially, just zoom this out a little bit. Very simple continuation, what we're just discussing, right? Let's say this is the 4 hour chart, right? Price makes a higher high. Use the highlighter tool. Price makes a higher high. It pulls back to form a higher low. That higher low is not confirmed until what? Until we get a break of structure. Once we get that break of structure, we now know where the higher low is. That becomes a strong low. Why is it a strong low? Because it did its job. It took out a high to form a higher high, right? So we now we expect that that higher low will be protected, right? There's a vested interest in that low not being breached, right? Big money has stepped in to cause that higher high. So when price breaks to the upside, we expect price will pull back, but it shouldn't breach this low here, okay? Now, like I was saying, when we first initially get that break of structure to form the higher high, we expect what? We expect a pullback on that time frame. How do we know when that pullback is going to kick in? Purely just looking at market structure. We look for that internal structure to switch bearish. So this is just looking at one time frame, right? We would look for a minor low up here, that first minor low to get taken out. So we get that first sign of weakness, we get that change of character, that chock, whatever you want to call it, right? Now the internal structure is bearish, okay? So the swing structure is bullish because that's our high, that's our low. This is the range we're playing within. But now we've taken out that first very, very minor aggressive low. We've had that first sign of weakness. That's a good signal that the swing run has now finished and we are now commencing the pullback. How do we know when the pullback is going to be over and the high low may be in place? We look for the internal structure to switch bullish again. So we look for that change of character to the upside. Okay, now that's that first sign of that higher high in the internal structure, right? So now the internal structure is aligned with our overall bullish swing structure. because the bullish swing structure has been, or the swing structure has been bullish the entire time. Now the internal structure is also bullish. It's aligned with our overall swing trend. So now, in theory, it should be all systems go to get long, right? And target what? Target that weak high. Why is this a weak swing high? Well, because it's failed to do its job. It's failed to take out the low. Okay, so that gives us a good target. So that's how we use change of character, looking at the internal structure to help us know when that swing run is over, when the pullback is starting, and then when the pullback is finished, and the next swing run is about to commence. So what's the next level to that, right? It's using multi-time frame analysis, what we were just discussing before. So here's the same kind of price action model we were looking at. So here, the white line, that's going to be a higher time frame. Just put the time frames in here that I personally use at the moment, just makes it a little bit easier to talk through. So the higher time frame, the white line is going to be the 4-hour chart. We then have the blue line, which is what I like to call my medium time frame. So that's the M15. And then the orange line is the M1, which is my execution time frame. So kind of lay this out, and then we'll go through onto the charts after this one. So 4 hours bullish, right? Higher high, higher low. We get that break of structure. What do we expect after a break of structure? We expect a pullback on that time frame. So we're expecting a 4-hour pullback. Just using market structure, how can we tell when that swing run, that 4-hour swing run, is over and we're about to get a pullback? We look for that 4-hour change of character. Or, we can go on a lower time frame and we'll see the M15 change character. We'll see the M15 potentially switch bearish, switch that trend. So that minor pullback here on the 4-hour chart, that minor low, not always, but most likely when you drop down onto, say, the M15, that will actually be a swing low on the M15, right? This would be a swing low on the M15. So when we get that 4-hour change of character and we drop down to M15, you will most likely see the M15 have a bearish break of structure, break of swing structure to the downside. So essentially that minor low on the 4-hour chart is a swing low on the M15. So you'll see the M15 now switches bearish. The M15 forms a lower low. It pulls back to form a lower high. And then you can see that sustained bearish swing trend on the M15 is just that 4-hour pullback, right? The lower time frame has to switch bearish, but doesn't have to. But a lot of the times we'll switch bearish to facilitate that higher time frame pullback. Okay, so again, just to summarize, the 4-hour makes a high, a high, break of structure. We're looking for the 4-hour to pull back. We drop down to the M15. We wait for it to switch bearish. That then gives us really good confirmation that the 4-hour is now ready to pull back. So if the M15 is bearish and the 4-hour is pulling back, but the 4-hour is bullish overall, right? The swing trend is bullish because we're now playing within this swing range. We expect this 4-hour higher low to be protected. It should be a strong low because it did its job. It took out the high. So that gives us good information because we now know that with this pullback, this 4-hour pullback, which is an M15 bearish trend, we know that it can pull back, but it shouldn't go any lower than this swing low, right? The swing range we're playing within theory, okay? It shouldn't go any lower than that. So we know that we can start to look for a higher low. Now, let's say price comes into a nice demand zone, right? Or whatever way you like to trade, we can start to trade here and get long, right? And there's nothing wrong with that. I do that as well. But in this theory or this lesson, we want to look at what can we use as more confirmation, right? To confirm that we are going to form a higher low here and we're not actually going to break that low and have a trend change. So what we can wait for is we can wait for the M15 to switch bullish to confirm that the 4-hour higher low is wanting to form, right? And then that just gives us that extra bit of confirmation. So as you can see here, M15 breaks structure to the upside, right? It breaks that lower high to form a higher high, right? So now that gives us really good confirmation that the 4-hour high low is in place. But we don't just want to buy straight away as soon as we get that M15 break of structure. It's poor risk to reward. We want to wait for that M15 pullback, right? To try and catch that M15 higher low to then try and get that next swing run, right? But we can time that even more and we can drop down to the M.
Yeah. Okay, so hopefully everybody kind of can see where he's going with all that. I really encourage you guys to take some time if you're lost to watch that market structure video, the series. Watch the one we watched last week, and this is about an hour long, but we just don't have that hour to watch the video today. I want to go to the chart and kind of look at some setups that were being traded last week. and kind of run you through some of what at least my thought process was from for last week. All right. So what I do know is I know we were getting a 2 hour or a 2 month bearish OB for all intents and purposes. Some people won't call this a bearish OB. But for me, this is the 2 month bearish OB. It was something that I anticipated. It's something that I've been looking forward to for quite some time. But because I expected for us to get the 2 month bearish OB, it was some things that I knew needed to happen, right? So as a trader, um, and you understand that we pushed down and we ran this low right here, right? So you know, you know that this close below this low is crucial, right? This push up is your chalk move, right? Your push up and your pullback. That's your chalk move. What we cannot have happen is for price just to catch out and run. Last week, it can't catch out and run. If it does that, it destroys your 2 month order block. So for all intents and purposes, price has to wait, right? Price has to wait here, which is why it consolidated for a full week. And went into this Wyckoff accumulation just to borrow people's money who don't um, kind of understand what they need to see or what they want to see. Um, if price had cut out to go up, that would have suggested to me that, hey, man, um, these JPYs aren't going to be bearish, right? And if I was just looking at GJ, then maybe it could have been in the cards that these weren't going to be bearish. But when I look over at UJ, um, I had no doubt that we're going to be bearish. So if you look at all these together, right? If you look at the JPYs as a group, and your big three are bearish, right? To me, it's a no-brainer that uh, we had the whole price down at the bottom, right? And then on Friday, because that's your reversal day, you can get your up move. So if you follow what was going on, you got the early liquidity grab. All it did was dip down below this 4 hour accumulation, this Wyckoff accumulation. Price dips down, grabs all that liquidity, right? It dips down into your zone if you're one of those supply and demand traders. It dips down into your demand zone and it catches out, right? Where does it catch out to? Those highs. And it wicked those highs. It changed of character, you whatever you want to call it. Now we'll get a pullback to go higher. So everything kind of meshes, right? It works hand in hand. So you're going to get a pullback, more than likely to the 78 before we start selling, right? But everything is set up for you now that you can trade your pullback if you want to, or you can just you wait, assuming that these highs are going to hold, right? Just the same way on that video where he was explaining um, how we can approach this as if this high is going to be protected, or this high right here will be protected. So when this thing starts pushing back up, as we start breaking highs on this side, we can trade this with confidence that this high will be protected. So however you come up with marking your charts up or marking your points of interest, um, that's cool. The way I do it, let me just delete this stuff. I want to fib the entire candle, and I want to mark my golden zone, and I want to mark my 78, right? This blue line is my 78. So once I have my zones marked up, I just automatically go to the 4 hour because that's where I'm going to be looking for my particular uh, liquidity. And I have a high right here that's, probably a high likelihood of getting ran. I have imbalance here, and I have imbalance at the 88. So um, to me, this is a easy trade setup for me personally to see. It makes sense. I have everything that I need personally to get involved in this buy up, right? I can also see where price came down, consolidated Wyckoff, right? Came down, got the liquidity, and came up and wicked that high, which gave me a chalk. So now I'll get a pullback. I can get involved in this trade, and I can be a reasonable person, and I can expect to get paid, yeah, 616 pips on the light side, and close to 700, maybe even 750, 770 if it goes all the way up to the 88. That's reasonable. I'm not making it up. It's just what I see, going by what the market has shown me, and the candles that have closed, 2 month being the most recent candle that is closed, highest time frame that I can go to get the most recent price action. Now, um, so I believe, and maybe I'm a little radical, but reading these charts is like learning a foreign language, but it's still reading a chart. And I have a brother uh, who's a PhD, and I say that because a lot of times when I talk to him, besides the fact that he's a little bit wacky, um, he uses a lot of words that common people don't use. And it's not that I don't understand it. I don't understand why he uses those words. Uh, most people, um, most people that I know, most friends that I hang out with, first of all, they're not going to tell you. Um, they're not going to tell me that they're feeling down or whatever. But my brother uses terms like "I'm feeling melancholy," and most people don't use those terms. And I just try to correlate that to these charts. Most people aren't looking at a 2 month chart. So, let alone understanding how they can apply this 2 month chart to their trading to take advantage of a move, right? Uh, I'll never ever forget, and I still feel this way today, that when I first started learning trading with Ruby, and I just couldn't get the zones, like how to mark up your support and resistance zones or whatever. It all seemed so arbitrary. Like it was opinion based, and I would mark my zones up, and somebody else would mark their zones up, and they would look at mine and say, "That's not right." Okay, what? What? Why is mine wrong and yours is right? And why is mine right and yours is wrong? It's all so subjective. And now we finally have a way that we can be as accurate, like to the pip accurate, if we learn how to read these charts, if we learn how to correlate the information. So as high up as the latest candle that closed, which is the 2 month. Um, in before you ask me why do we care about this 2 month, is because the 2 month went 1,189 pips. So if we just pull back half of that, it's offering you 600 and some pips. If we pull back 78% or 75% of that move, you get the picture. You have a 700 pip move that you can get paid from because you understand the lingo of the 2 month chart. Next month, we'll understand the lingo of a 3 month chart, so on and so forth. So the importance of what we're doing here, the importance of learning this this higher vocabulary, if you will, uh, is that it pays well. It pays well for you to understand um, these higher time frame charts. And if you can correlate these time frames, right? If I can drop all the way down to this 1 hour chart and I can wait for price to get a market structure shift, right? If I can wait to break a high and get a market structure shift, now I can start cooking with Crisco because I understand I can enter this buy to go north for 700 pips. If I can enter that buy on a 15-minute chart because it broke structure, right? Nobody's going to argue with me on the 15-minute chart that this is a break of structure. If I showed you that on the daily chart, you'd be like, oh, that was a Wix. Shut up. It's a break. Now that we broke structure, we can wait patiently for our pullback. We can enter this trade, whether you enter in at your zone or whatever you want to call it there, buddy. When price comes back to pick us up and we enter this trade, nobody, and I mean nobody, has any excuse to get out of the trade until it hits at least the 50% of that 2 month candle, if you understand market structure. If you understand market structure. A lot of y'all say y'all understand market structure, and then you'll turn around out of the other side of your mouth and say, well, I don't believe like that, or I don't trade like that. But it is what it is. Everybody has to find their comfortability when it comes to trading. I'm just telling you like it is, not how it should be, and not how I want it to be. I'm strictly looking at what the market is giving me, and I go from there, right? A long time ago, we got a huge push down that broke all these lows. And a long time ago, I told everybody who would listen that JPYs was bearish. And then we got this trade that pushed up. All that is a pullback to me. And then this complex move back down fooled people. It's just a complex move down. It means nothing. It means nothing. Don't get caught up by the theatrics. Don't get caught up by the window dressing. You have a move down, you have a pullback, and you got a continuation. That's all. There's nothing to see here. Anything else, any sideways mambo jumbo, any lower time frame fireworks is all to confuse you. The push down happened. Yes or no? Yes. The pullback happened. Yes or no? Yes. Okay. So if you believe in structure, you went from a high, you market structure shift, however you want to look at it. There's your chalk, there's your pullback that supported this high. Now we're targeting this low. I don't care that it's going sideways. I don't care. I don't care. Right? It's still coming down here. right? It's either going to break this low or it's going to respect the low. But what you are going to do is you're going to respect the fact that the market has to come back here. So anything that's happening here, right, is just the market coming down. It's taking us a little time. We don't control that. We don't control the time. All we know is the market already showed us where it's going. It showed us with that move down where it's going. It taking its time, okay, that's cool. And what you can't deny is we broke this structure. That was structure. Internal structure, yes. But when the market came down, it pulled back. It didn't violate that high. And then it pushed down and it broke that low. After it broke that low, it pushed up and pulled back. That's called a chalk. To anybody who understands, that's a chalk. Now we're going up. Just a pullback. I don't expect these highs to be violated. And then once we start selling, you can sell to these lows. I get it if you can't hold a trade, but that's just what's honestly going on. That happened. It already happened. I can't fix it. You can't fix it. It's already happened. And the only thing you can do is you can accept it or you can get wrecked. And that goes for all the JPYs. And if you look at your charts, you're going to see the same thing on your chart that I just showed you on my chart. So, you either trade it or you get wrecked. And that choice is yours. Some people just enjoy being wrecked. They would rather be right and get wrecked than to follow what the market is showing them and make money. Let that sink in. Okay. Is there any questions over any of that information?
Yeah, I got a question, Todd. So based on that, you're saying you're waiting for a pullback in a chalk on the 4 hour, or we already got the chalk on the 4 hour, but are we, based off of that video that we were seeing, would you still recommend a 15-minute wait, a chalk, or just the 4 hour?
What do you mean?
So you said based off of that chalk right there, we waiting for a pullback.
Where is the market going to pull back to?
Let me pull it up. Down. Yeah, thank you.
There are several imbalances on this leg of structure in between your 62 and your 78. Now we've already pulled back. We ran into this structure, right? Now, this was a push down. This is the breaker structure. This is a pullback. So if this high doesn't get violated, we're going further down. I think we're going further down. I think when the market opens, we're going to push down, right? And I'm going to look for that low to get broken and these lows to get broken to go into the imbalances that are in this area.
Okay, I see.
You see how I did that? All I'm looking at is the structure. That's it. Not my opinion. Hey man, the market has to come down. No. Nope. There's the zone. We hit the zone. Right? This push down hit the zone. Y'all can see it's all kinds of sideways movement and it's a lot of window dressing. But at the end of the day, this push down violated this low. It's a breaker structure. Right? Then we came back and now we chalked. Right? We didn't break this high. So it's either going to go up and break that high, or we're going to respect that high and push lower. I think we will push lower. But at the end of the day, it's not about what I think. It's about what the market does. It's either going to wreck this high right here, or it's going to wreck that low. And once it does what it does, then you can do what you do. So if it breaks this high and pulls back, then you can go long. If it breaks this low, then you're targeting those imbalances.
Mm-hmm.
Does that make sense?
Mm-hmm.
So just allow the market to dictate to you what it's going to do. You can have your opinions and your expectations. I always have an expectation. But the market has to either validate what I expect or invalidate what I expect. Even on the 15-minute, when you look at this chart, we can see how the market has pushed down to take out that low. It pulled back up, then it pushed down and took out this.
Yeah.
So it pulled back up. That high, that low.
Yeah, the imbalance. It pushed right into the imbalance.
Exactly. So all you're doing now is you're observing what structure is being broken. And if we just stick to this right here cleans up most people's trading. For whatever reason, when the market starts moving, everybody's adrenaline gets crazy. And we start doing things that are just made up, and it hurts our trading. But if we can just focus on the big picture, right? By throwing your fib, you can mark your fib areas that kind of will set your trades up. Then you can have a better opportunity at catching trades. Now, this is a JPY pair, right? It's a JPY pair, and probably 2/3 of the work has been done. 2/3 of the work, right? The push up, and 2/3 of the work because the pullback is already upon us. So even if this pulls back, there's a high probability that we are going to get an Asian session entry. Everybody hear that? Do y'all understand how I came to that observation or conclusion or whatever?
Only reason I'm looking at it is because you haven't swept the Asian low yet.
Well, no, man. We might not sweep this Asian low.
It's an order block. It's an imbalance right there. That's why.
But we might not sweep this low. Why is it not important for us to sweep this low?
Because it's an imbalance right there.
No, but okay. Let's look at a higher time frame. This is the higher time frame where we tapped in over here. This tap, we swept all these lows. Why don't we have to come back to take out this low, which is that Asian session low?
It's an imbalance.
No, it's a higher low. Is it because it's protected?
It is a higher low. And when we pull back, we're going to pull back. The market is bearish. We're going to come back and get it. We'll come back and get this low on the way down. The market is bearish. We don't have to take out that low. We can leave that low, and we can go up here and do what we got to do. Then we can come back and run through that low. We're going to come back and run through that low because the overall target is this low. Whether we break it or fake it, we break it or we respect it. But price, this is the low. Remember what the dude said. You got your swing high, and then this is your change of character push, right? We ran these lows. We came back up. This high is your weak high, or this is your new high. We didn't break this high, so we must be going to break this low, right? So when we came back here, we had one opportunity to break this high. It didn't. We pushed down. A lot of y'all told me that because we didn't break that low, he's gonna push back up. We didn't break this high. And we just broke this low. So everything from here is going lower. So when we pull back, I expect for these highs to get respected and for a push down. This is the next low, but eventually this is the low that we need to be challenging. That's my full-on expectation. And my expectation is based on the fact that we got that change of character, right? On some time frame, this big move down is just a change of character. Let's go up to the daily. Okay. So if you're looking at this daily, you got all these moves up, right? This at some point was a swing low because this push up made a new high. And you got the push up to make this the high. Then we came down and we wrecked these lows, right? So if you're looking at this as your swing low, and I mean, you just take your pick, and that's your change of character. Then you get a pullback. So we're going to this low. We're going to either respect it or we're going to break it, but we're going. Because that's what your change of character does. And if you look at any other video and any other time frame, those change of characters, they mean the price is going opposite direction. So that's just high, that's high time frame, high level stuff or whatever. All I'm saying is we have the information. It's up to you to trade the trade, right? And you trade the trade on the lower levels based on what structure is being created and broken. So if you can read structure on these lower time frames, you see when this low got broken. You see when it got broken. The market pushed from here to here and broke that low. Then we got that huge run up last week or a couple of weeks ago, but it didn't break that high. Then we came down. We didn't break this low, right? So at some point in here, this push up and pullback was a chalk, right? We broke highs. We broke highs through here. So whatever level, maybe you're saying, oh, it's not a chalk on the 1 hour because this 1 hour high didn't get broken. But bruh, it's a bunch of 1 hour highs in here. Here's a high right here. So this push up is definitely a chalk and a pullback. But people will argue with you about that. Well, it's not a chalk. Okay. You sell because push up, pull back, right? Take a liquidity. We got everything we need. All we waiting on now is to see how far it's pulling back to get in for the buy. And you can hold the buy until it gets to your area of interest. Whether it's in your zone, right? There's equal highs right here in your golden zone, so you know it's coming here. There's trend line liquidity right there. So that's a good level. That's a good level of liquidity, and there's imbalance. You hold it to where you feel comfortable. I'm probably holding mine at least until this 195 area, right? And if I'm taking GJ, I'm probably taking UJ, but still, it's all the same, guys. Whatever pair you're trading, if you're trading this pair, still same example, dude. Same example. You have your lows. We dipped down below those lows. We chalked it up. Now we're looking to run into our zones. We got relative equal highs right here. You got an Asian session high that didn't get wrecked yet. Like all that stuff is you can target, as far as liquidity. If you're taking UJ, great Wyckoff setup, great Wyckoff setup, right? We just broke that high right there. Pull back, we going north. So it's all the same setup. It's just whatever tool you're choosing to trade. your ability to read it is the only thing that's preventing you from turning that into a level of payment. So sometimes people aren't going to see uh, the same things, right? Or they aren't going to see it at the same time. Like a lot of people told me I was a crack smoker when I said that JPYs were bearish. I get it, man. They've been bullish for like 4 years, but they're bearish. And nobody, or I'm not gonna say nobody. I'm not gonna be like y'all's president. Nobody believed me, but we had the greatest interpretation of price, the best ever. We did great things. But my point is, I knew it was bearish here. We pulled back, and it's bearish again. So we'll get a buy up, and we'll keep on pushing. Y'all know how I feel about the moving average. We haven't closed below the moving average. That is crucial, right? But if I go and look at uh, my homeboy EJ closed below, bro. So we pulling up, man, and now I gotta look. I gotta target some imbalances, in this range, right? Because this low is going to be next, right? And then I can target some imbalances within this range. We kind of already have an understanding that when we get a push up, right, we get displacement, and then the market trades back to that displacement. But maybe guys, maybe it takes 2 months. Maybe we get a green candle that closes up. I'm not saying that this is going to be a 1 week move up and then we're going down. I'm not saying that. We could go up very fast and we can go sideways for a month. The point is price is going to trade back up and then price is going to start pushing down. Or price is going to trade up and start breaking highs. So you just have to wait. You trade the direction that you're given, and you have to react to what price is doing. Whenever price gets into my zone and it hits the imbalance that I'm targeting, I close my trade. If the price, for whatever reason, trades north from there, I don't have a trade until it breaks the high and pulls back. Then I have a trade going north. But you have to trade what these higher time frame are telling you to trade, because like your boy said, it's a lot of money, probably trillions of dollars that cause these structures like that, right? Trillions of dollars push this market down. That's how you can trust that it pulls back up and it's still going lower. So the only thing that we can do at this point is trust the fact that we're going lower. If you notice, this was an order block, man. Push that market all the way up here. It took 1, 2, 3 2-month candles. And then the fourth one, we finally pushed down into the order block. So you don't have to listen to me about it going low. You can see what's in front of your face. We couldn't push through. There's a lot of orders. We took all those orders. It pushed the market back up. We couldn't push through. Push the market back up. We couldn't push through. Push the market back up. Now we pushing. So you just go by what you see on the chart and you trade what's there. I wouldn't fall in love with any buys or sales. I fall in love with what the chart show me. And from this 2-month view, we're going to get a great run up, and then we can start looking for shorts. So however long it takes, that's how long it takes. We don't control that, but we do understand where we can take the market. All right, any questions? Okay, there are a lot of great setups, man. A lot of great setups. And not all of them are going to be on this super high time frame. There are a lot of good setups on the 2-week, right? We got 2-week OBs. We have 1-week moves from EA and GA that are beautiful. We got EC, we got GC. There are a bunch of pairs that are set up very nicely. If you're confused, say something, man. Like, reach out. If I'm not your a person that you learn from, right? Or a person that you understand or you agree with, my style of trading or whatever, reach out to your person because we have a unique opportunity to take horrible financial times. And when I say horrible, I mean y'all watch the news. We aren't going through hiring processes. Like people are losing their jobs, man. People are being laid off in mass, thousands, right? Like federal jobs, thousands. And we have the ability to, ignore that to a large part and earn thousands of dollars in the comforts of our homes or wherever you're trading while you're walking with your cell phone. So if you're lost, if you are confused, seek help. If you're not confused and you're greedy, um, you're undisciplined, work on that. Google how to fix your discipline. Meditate, diet, like strict diet. Put yourself on curfew. Like discipline is hard, man. It's not. It's something as simple as I'm going to do this, right? Anybody who's made a New Year's resolution to go to the gym or to lose weight or to abstain from having sex, uh, whatever the case may be, all of those things are difficult because we are undisciplined. We and we don't have pure hearts. We only things that we want is stuff that's bad for us. So we have to make a conscious decision and we have to put in work on a daily basis. What are you willing to do to change your financial future, to change your financial present, to change the way you live and the way you go about? What are you willing to do to get your time back? It's a rhetorical question, and it's a very personal issue. All I can tell you is if you put the work in, if you learn how to read the chart, then at least you can see the move. Once you can see the move, it's just a matter of doing the right thing by taking that move, right? You can under leverage and take a trade. You're going to win that trade. I'd rather you under leverage than over leverage. At some point, I want you to leverage the proper way and make the money that's available to you. But as a newer person, it's probably better to under leverage and take the trade than it is to over leverage to take the trade. All right. Any questions? Does anybody not see a trade setup? So y'all are seeing your setups.
I do.
I know you see your setup.
Yes, sir. And you, Jay.
All right, good folks. I really encourage y'all to go back and watch that video. We'll probably do it next week, but watch the video in full. I mean, the explanation is great. Accent is British. You cannot, I can't overstate the value of understanding how to read market structure. Once you understand how to read market structure, then you just understand or learn how to do multi-time frame analysis, which putting the different time frames together to create a picture. And once you can see that picture, your trading goes to a new level. All right, the name of the video.
Hey Todd, I came in probably like 5 minutes into it. What is the name of it?
It's how to understand multi-time frame market structure. So if you just go in on YouTube and you type in market structure, the dude's name is Matt Donlevy. He has
Okay.
this group or company called Photon Trading. He's just a smart money concepts trader. I think he speaks structure very well. I mean, he breaks it down, at least for me. You know, I don't know if y'all couldn't understand Pips of Persia, or maybe some of you could, but he breaks it down more in a SMP, smart money concepts style of trading. Pips of Persia did too, and he did a great job as far as I'm concerned. But you know, I want to find I wanted to find a different guy or girl to break it down a little bit differently to see if that helped more people understand structure. Because that's the problem that many people have is structure. And to me, structure is something that should never even be debatable. You're either broke it or it didn't. And at some point, we all have to kind of rely on that. All right, any questions? All right, good folks. I appreciate y'all's time. If you're in the 100 pip flip group, drop your charts, drop your charts, drop your charts. All right, I see you on the market streets.
Thank you.
Thanks,